Well, we are back in action. Today is Thursday. Today's Thursday, September 10th. I'm here with my partners, Marina Parkin and Jackie Durham, and today we are bringing you the long-awaited update on PPP. We have been unusually quiet about PPP over the last few weeks. We enjoyed the hiatus, I'm not going to lie, but but we do have some new information to share, so we felt like it was time to jump back on and get everybody an update. As always, you can put your questions down in the Q&A box. We will continue to field those as we go. If you have topics to suggest that you'd like to hear about, you're welcome to email us or let us know about those as well, because we'd like to bring you topics that are of issue or question or concern for you of interest. So without further ado, let's have our PPP enthusiasts jump right to it.
So Marina, I know you had a little bit of a tax item to share with everybody, and I think you wanted to start with that, and then I can dive into the new exciting PPP regs.
So the tax issue that I wanted to discuss, actually it's something that we had brought up before and there has really not been any changes, but I wanted to refresh everybody's memory because I am getting quite a few questions from clients on what's the timing of my forgiveness application. In other words, should I hurry and apply for forgiveness this year? Should I move my forgiveness application into next year? That has been asked several times, particularly as even though it appears that most banks are not ready, but I think that some banks are starting to send out even preliminary forms to start for people to start filling out. So everybody's kind of trying to get on that on the wagon to put all of that behind them. And really the question came up is, do I need to wait or should I do it in 2020? So couple of considerations here. Number one, as the more guidance starts coming out, some of the guidance is favorable, some of the guidance may not be so favorable. We don't know if there's going to be anything that's going to dramatically change how the calculations are done. But one train of thought is not to wait until any more unfavorable potential guidance is coming and instead apply as early as you can. Because right now it's the devil that you know. You know what the rules are, you have complied with them, you have calculated, you've got the right ratios for your payroll versus non-payroll costs, you've got it all right. So maybe let's not wait and go ahead and start the application and get prepared when the banks are ready. The other, I guess, train of thought of it's the opposite. Maybe you did get more money than you expected and you haven't spent it all, even in the 24 weeks extended loan period. And maybe you do want to wait to see, what else comes down. And maybe you don't want to be the guinea pig as to be the first batch of applicants for forgiveness. And there's some clients who are also of that train of thought to say, I don't want to be the first guy to apply for forgiveness and have my application be torn apart and examined and all sorts of stuff. So it may just be the train of thought of, let them work on the process and then I will apply at that time. So it's I guess pluses and minuses when it comes to that. And there's really nothing that we can say because again, we're not sure what favorable or unfavorable guidance will come out later and what the process is going to look like. But the one thing that I did want to touch on in terms of the timing of application is the tax issue. So if you remember when all of these PPP loans came out and they said when the loan becomes forgivable and forgiven, it is not going to be considered taxable income. So just a little background in the past, there has been 2008, there was a lot of loans on short sales relating to mortgages when the banks would forgive those loans and issue Form 1099-C. A lot of people were unpleasantly surprised that those loans became taxable income because it's essentially a benefit to you when the loan gets forgiven. So not to repeat the same mistake, the administration came out and said, no, these PPP loans are going to be different than the loans that got forgiven in the past on, credit card or mortgages and so on. It is not going to be taxable income. Mm-hmm. However, What they give with one hand, they take out with the other. So on the flip side, they said, we're not going to make the loan taxable, but whatever the expenses are that you paid with the loan proceeds are not going to be deductible, which essentially is exactly the same thing. So whether the forgiven loan proceeds become other income on your tax return, or you have to reduce your payroll costs and rent costs and whatever else costs you covered with PPP proceeds, the net income bottom line is affected in exactly the same way. So they came out and they said, okay, the expenses are reduced. But people were not paying attention at the time because everybody wanted to get this free money. Free money because I'm going to get it and it's going to get forgiven. And nobody really paid attention to the tax impact. When this was repeated in the guidance and the news and the articles and so on, it kind of became clear that this really wasn't the intent of the law, is to really create this negative and adverse tax consequence of this PPP loan, especially when they had already said that the loan is not going to be considered taxable income. So currently, as it stands right now, the expenses that are paid with the PPP proceeds are not going to be deductible. However, that is being fought in Congress. And we have no idea what the resulting situation is going to be and what the guidance is going to be, but the IRS notice that has been issued clearly states that you will not be able to deduct expenses. So that brings me back to, should I ask for this loan forgiveness this year, or should I wait till next year? So let's talk about the pros and cons. If I get this loan forgiveness in 2020, and that means I'm going to reduce my deductible expenses, i.e. increase my taxable income, this may not be a bad year to do it, because if you really suffered economically as a business and were closed for several months and may not even be back to your normal operating revenue, this may not be a bad year to eat up that extra taxable consequence. If you're waiting till next year, and if all is well and you're back into the recovering normal operating type of groove, and you're incurring the revenue, and you don't really want to put any more of the taxable impact in 2021. However, if you think that you generated a lot more revenue in 2020 because you may have had projects in the pipeline from before COVID, let's say you may have been a builder and had a lot of stuff happening, and now COVID affected your pipeline going into 2021. 2021 may be the better year for the forgiveness application, because in 2020, you're going to have all that revenue you earned from the projects that were already on the books. And in 2021, that revenue is not going to be there because you were not able to feed your pipeline for 2021 revenue. So I think the importance here is to look at where you expect the income to land. And the year where you're going to expect to have less of an income is probably the better year to get the forgiveness application. Because really, until the SBA says that your loan is forgiven, it's not considered forgiven. And until it's considered forgiven, you're operating with the assumption that it's just a loan, therefore you can keep deducting your expenses. So this is my kind of train of thought on the timing of the application. In terms of what is the deadline to apply, and Jackie, let's discuss that a little bit. From what we understand, from the end of your covered period, you really have 10 months until the loan payments start to be due. So without really some clear guidance on this is your deadline to apply, from everything we're reading, we understand that we really do have the 10 months from the end of our loan period to apply before the loan becomes due. So that 10 months period really gives us a wide range of being able to apply in 2020 or being able to push it into 2021. So this is just something that I wanted to highlight on the timing. And Jackie, let me know what your thoughts are here. I know we discussed that a little bit the other day.
Right. So I mentioned this a while back. They came out with basically a deadline, an informal deadline to apply for forgiveness. But really what it is an expiration on the grace period you have before you have to start making payments on the loan. So I guess what they provide is after 10 months following the expiration of your covered period, whether it's the 8-week covered period or 24-week covered period, if you have not filed your forgiveness application, you will be required to start making payments. Mm-hmm. It doesn't specifically say that if you fail to meet that 10-month deadline that you are now waiving any forgiveness at any point in time. I just can't speak to what it will look like because it's kind of an informal deadline. So to be safe, if I were a borrower, I would make sure I get my forgiveness application in within the 10-month period. That gives you a good amount of time, especially if you've taken a 24-week covered period. That's a good amount of time that you're going to have to sit on this. And another thing that has been, kind of kicking around Congress is the legislation that was proposed a month or so ago that would exempt a lot of our borrowers from having to file any kind of forgiveness application if their loan falls, I think it was below 150,000.
That's correct.
So that would be really beneficial to these borrowers. The reason why this was proposed in the first place is because Congress was estimating that the average expense for a borrower to pay a professional to complete the application and to make sure that all the representations were accurate and that the rules were properly followed, per borrower, the fees would fall anywhere from $3,000 to $5,000. Mm-hmm. And we're talking about small businesses who are already facing economic injury and stress, and they don't need hefty bills on top of that just to complete an application. So they were trying to alleviate that expense for them. That has not passed yet. It's my hope that it will, because it will save banks money. It will save borrowers money. Borrowers would have to just sign some kind of affidavit attesting to the fact that they've complied with all the PPP requirements. Now, what SBA does after the fact in terms of auditing that and asking questions and coming back for your files is another question, but at least it would avoid the initial pain of having to complete that homework assignment that is the forgiveness application. So I think that's a consideration for people to make. I'm going to be sharing some regulations that were passed recently, which are another example of why it might not be a good idea to wait, especially for our borrowers who have related entities who they maybe pay rent to. So I'll get to that in a second. But as Marina said, it's a double-edged sword. If you can sit and wait for favorable legislation that will make things easier for you, but you might also run into some regulations that are not so favorable to your particular situation. So
really, this is unfolding just like the PPP initial application itself was. If you applied day one, you had a broader range of expenses you could include because they started to fine tune and refine the rules. The same thing is going to happen on the loan forgiveness applications, that the more time they get to tinker with it, the more changes we're going to see. So,
right.
It is, you won't know which way was better until it's done, but that's the risk, I guess, of filing early or of waiting, is you don't know which way would have been better.
Right. So that's what's fun about evolving law.
In the middle of a pandemic.
Now, have you guys heard of any banks starting to accept it, or most of them? What my clients have been forwarding to me, just to keep me in the loop of what their banks are saying, is again, stand by, or
they're empty emails saying it's coming, we promise it's coming. I feel like maybe it was Chase sent an email in the end of July that said our application will be available by the end of August, and that ship has sailed, and they're still sending emails that say it's coming, but every email I have seen has been empty. It's just saying something to say something that says, hey, it's coming, but there wasn't any real meaty information.
I would suspect that there's some hard lobbying up on Capitol Hill right now by these large lenders urging Congress to please pass the legislation I was just describing, because it's going to save everybody a ton of money and expense. And
those are the low risk loans anyways. I mean, they're low dollar amounts. It's really not worth the government's resources to pursue a fraudulent $18,000 PPP loan as opposed to, the ones that are larger.
Well, and the other thing on the timing is, we're talking about having this 10 months sort of as a period in which you can apply. but there's really nowhere that you can indicate when you choose for your loan to end. Because if you had selected the 24-week instead of the 8-week, let's say you got the loan originally and it was just deemed to be an 8-week loan period, and then 24 and 8 is a big difference. So if you think you've got 10 months from the 24 loan period, you may start to get some possible notices or whatnot from the SBA to say your loan is now due, but then you say, well, I've actually picked the 24 week period, but you really don't say that to anybody, do you?
Well, I haven't looked at that application in a bit, thankfully. So,
let's be thankful for that.
So I'd have to knock the dust off of that one, but I feel like, if I recall, I think we might put in the covered period dates, but what they don't necessarily provide for is people keep forgetting this. If you got your loan after June 5th, you're stuck with 24 weeks, whether you want 8 or 24. So that makes it a little more simple for borrowers who got their loan after June 5th. But I feel like either the form's going to have to be updated to be a little more clear so that we know what kind of covered period someone's working off of. Or, I guess I would encourage borrowers, if you have a question about when that 10 months starts to toll, to reach out to us or to your lender to take a close look at that.
Yeah.
So, do you have anything to add to that, Marina, before I jump in?
The one other thing that I wanted to add, and this is not PPP related directly, but next year's tax returns are going to be hell. Well, it doesn't matter what year you applied for forgiveness and whether you applied at all, or maybe you were under 150 and you didn't have to apply. That's the other thing we're going to have to figure out is, if you were under 150 and it's considered forgiven, when do we consider that it's forgiven? Do we consider it in 2020 and eat that tax impact of not deducting the expenses used to pay with $150,000? Or do we push that into 2021? Do we have any leeway at all on the timing? And what do we do? And do we wait for more clarification, or for the IRS to issue a notice and say, no, it's actually deductible and that's okay. We take back that position. So it's going to be a lot of uncertainty. It's going to be a bit of a bookkeeping nightmare. I know I've talked to some of my clients, I've looked at their books, and they have classified those loans. There's a couple of different ways. Some of them have set it up as a loan payable. Some of them had already put it as other income. And depending on what the situation is for that particular client, we may have to make adjustments. We may have to, adjust expenses. So I think that we need to expect to have a longer period of time next year to prepare these returns. Hopefully we don't have too many people on extensions that are not normally on extension, and then we can figure this thing out early on. But just be prepared that if you think this tax season is bad, wait till the next one.
Patience.
Don't call your CPA on April 14th.
Please do not.
Before we transition into Jackie's regulations, we have a few questions. It seems like we need to do a real brief recap of the rules. I'm getting a lot of questions about what ratio of payroll to non-payroll expenses was required. Can you remind us?
So there's a 60-40 ratio. At least 60% of the loan proceeds have to be used for payroll. And this is not just for purposes of what's forgiven. This is for purposes of what you are legally allowed to use the proceeds for. And then 40% for those non-payroll costs. And I'm sorry, was there any other question? Because you froze up for a second, Joanne.
So that was, yes, there's several questions, but that was the first, was just the breakdown on the payroll percentage versus the non-payroll costs. And then as a follow-up to that, can either of you address if that's just wages or payroll taxes or the charges from the payroll tax company that's included in the payroll figure?
I don't think, Marina, correct me if I'm wrong, the payroll taxes, yes, to the extent that they're not claiming them as I think there's a rule surrounding the payroll tax because there was a tax benefit that was being provided under the act as well. So I don't think you can claim the part that you are receiving as a tax benefit, right? And
That's
then
correct. The tax is
payment and then fees to a payroll company are not going to be what I would consider to be payroll expenses.
absolutely not. You got it.
Terry's asking us to put on our best Miss Cleo and say, do you feel good that Congress will simplify the forgiveness for loans under 150? If so, I should wait. Don't know. I mean, I sure hope so. Kyle Koontz. I certainly can't control Congress.
Well, and what I also want to say is, when that legislation came out, everybody was popping champagne like, oh, if I have a loan under 150, I'm automatically forgiven. False. You still have to follow the rules. You still have to be technically entitled to the full forgiveness. You can't just sign this and waive SBA away. So it doesn't change who's entitled to forgiveness, and it doesn't just blanketly say that everyone under 150 is automatically entitled to that forgiveness. So I just want to.
And I think that the SBA can still come back and audit what you spend the money on.
Correct.
And again, we talked about this in the past, but remember, they may not audit you because you're a little guy under 150 PPP loan, but if you're going through an IRS audit, or IRS is looking at your return, or somebody else, another agency is looking at your return for something, and they see something funny, or they just randomly pull you, they can give the company's name to SBA, and SBA can still come back and perform some sort of an audit and ask for documentation on what you spend the money on. Because again, it's not just because you're under 150 and you got forgiven doesn't mean you can spend that 150 in a different ratio or in things that are not in the allowed type of expenses. So what's gonna really make the 150 thing easier if it does pass is just not having to do that application, which is a pain. Everything else stays. You still have to spend your money properly. You still have to spend it within the right time frame, and you still need to have all your documentation. And I cannot stress enough the uncertainty documentation. As we're looking at our clients, and our clients are doing better. We have a lot of clients who have recovered well, that are doing really well. Everybody's very grateful to be in the position where they are. Now they're running at all cylinders. They forget what it was like and what uncertainty they faced. If you don't have that documented early on to say, what was the problem again? I know everybody closed and I know it was a pandemic, but 6 months later, I'm doing really well, or I'm super busy. You better have documentation, whether it's minutes of the meeting or just a memo to file as to why you felt in April that you had economic uncertainty. And you got to be specific. You can't just say, we were scared. You have to say we were closed for 30 days, or, we were not sure. Things, or you have to compare maybe to last year and say, last year, this time I had 20 contracts on the books. This year, this time I have -5. So it's things like this that you're going to miss. And, SBA has what, Jackie, six years to come back and audit this stuff. You're not going to remember 6 months from now what happened, never mind 6 years from now. So
you probably don't remember 6 weeks ago what happened.
I don't. I have post-traumatic PPP stress.
Yes.
And, speaking of PPP stress, I think that this is a good segue into some things I wanted to share about EIDL, because all of a sudden everyone's finally getting their EIDL loans 10 years later after making application back in the spring. So keep in mind, everybody kind of looks at these as being similar loans. They are being obtained for similar reasons, but the thresholds for need are very different. So for PPP, there just needed to be economic uncertainty that made the loan necessary to cover operations. That is very different from EIDL, which requires substantial economic injury. Now, of course, true to form, SBA has not quantified what does substantial economic injury look like. I've read a lot that really substantial economic injury is about 50% or less of what your business activity was year to date the year before. Now, keep in mind, though, borrowers, that you may have had substantial economic injury back in March or April when you initially made application for the EIDL loan, but your business may have rehabilitated itself since then. And you also, when you're going to sign the actual loan agreement for the EIDL loan, you have to still be suffering substantial economic injury. So if you've recovered, you technically don't qualify for the loan any longer, even though at the time you made the original application, you may have. So that's something to keep in mind. Something else I want to mention is there are a lot more restrictions about what you can use those proceeds for. It really is meant to cover working capital that is necessary to help the business limp along until conditions improve and it's no longer facing that substantial economic injury. So technically, if you receive the loan and then conditions improve and you haven't exhausted all the loan proceeds, you need to return those once your business conditions restore themselves and you're back to where you were back in 2019 or at the beginning of 2020. And I also just want to recap on what you may use the proceeds for, what you may not use them for. Working capital is really meant to include employment compensation, not bonuses, not payments to owners unless it's actual compensation to the owner for services rendered, not dividends or distributions. It can cover rent and mortgages and other accounts payable, but it can't be used to refinance debt. It can't be used to cover shareholder loans. It can't be used to cover other federal loans. It can't be used to improve or repair your lease premises or your mortgage premises. It can't be used to even relocate. There's something in the loan agreement itself that says that you will not relocate with these funds. Now, to me, that's really SBA trying to prevent, because if you'll keep in mind, this is a disaster loan. This loan program has been in place for some time. It's also meant to help borrowers who endure things like hurricanes. So what they're trying to avoid is a disaster area having all of its businesses jump ship and use EIDL proceeds to relocate to another city. That would be devastating to that city. But what I don't think it's trying to do is necessarily tie a borrower's hands from relocating down the block to a more favorable lease space. So if you do get an EIDL loan and you need to change space to a place that's still located in the same city, in the same general area, I would just reach out to the loan representative that you've been speaking to leading up to receiving the loan, just to put it in writing that you're doing this for X, Y, and Z reasons, and you really shouldn't have a problem there. I just wanted to make sure I'm covering all the restrictions. I think I covered most of those. So the reason why I kind of wanted to go over this is because I've had some clients who are self-employed or have, maybe a single member LLC, and they've asked, hey, I noticed that there's a restriction of payments to owners, but I'm the owner receiving self-employment income. How do I delineate between payments to owners and employment compensation if I get it all in one payment as a self-employed individual? And there isn't any specific written guidance that explains how to treat a self-employed individual or independent contractor who's in that position. But I did talk to an employee at an attorney at SBA to basically get his feedback. He wasn't able to point me to any written guidance. He wasn't able to put anything in writing to me directly that was helpful. But he did discuss it with me over the phone and basically said that if you're a self-employed individual, say you file Schedule C, it's safe to say that as long as you're using the EIDL loan proceeds to basically restore your self-employment compensation to what you were receiving at the same time back in 2019, that will be a reasonable use of the EIDL proceeds. So that's kind of a rule of thumb. It's not formalized anywhere. You can't take that to the bank. I'm not swearing to God that is, not going to come back on anybody, but that's the best I could get out of an SBA attorney. And unfortunately, there's not a lot of additional guidance out there. But just wanted to mention that out loud because I know we have a lot of self-employed clients, and that has been a common question that I've been receiving.
It's unbelievable how the people who write the rules have no real idea how the functions actually take place or are carried out. So frequently we see these rules not marry up to the process or the procedure that you have to endure. We're used to it in the tax world, but none of the legislators are tax people, and then you kind of have to back into it. The problem here has been the volume of not only the passing of the rules, but the volume of people that are affected by it. So it's everybody all at once in a crisis. And it just highlights how disjointed that process is. It doesn't help anything. It just, when you, it's calmed down now a little bit, but in the beginning when people were super frustrated with their banker or their accountant or their financial advisor, like, well, you told me this and that was wrong. And it's like, well, the people that wrote the rules don't even know what's right. So this has definitely been a fluid situation, and we, between the three of us, have had jaunty debates about our interpretations of not only the rules, but of the interpretations of the rules as those have come out. So, you know, it'll be interesting to see how this continues to unfold. But if the SBA lawyers don't know, what are you going to do? You know, it's unbelievable, but totally 2020.
Right.
One thing I did also want to mention on the EIDL loans, I've got a couple of questions from some clients. There's still confusion as to when people get the funds, whether they're EIDL or PPP. You know, the clients say, oh, I got this loan proceeds and I didn't really even sign up for it, but here it is. And they get a statement and it's, you know, when we read the statement, it's actually EIDL loan. From what I understand though, is before they actually grant you the, or, you know, give you the loan, they still make you sign for it. So even if the application comes back approved, whatever number they come back with, you still have to actually sign the loan document before you get it. So if the case, if you know, if you're still having EIDL loans being approved, I would read very carefully as to what it is that you're signing. If you think it's PPP, but it's actually EIDL, please beware. The EIDL is what SBA calls the disaster loan. PPP is clearly Paycheck Protection Program loan. So if there's no PPP in the name of the loan and it just says SBA disaster loan, that's an EIDL loan and that's a real loan. I had a couple of questions from clients and non-clients that were a little bit surprised on the, they were starting to get coupons and reminders that they're going to start to have payments, you know, next year. And when we looked at it, it was actually the EIDL loan statement. It wasn't the PPP loan. So please read carefully any correspondence you get from SBA on the EIDL versus PPP. Jackie, do you agree with that? That has, I think a few of them have come across your email as well.
Well, you know, back when all of this came out, everybody heard about the EIDL grant and everybody ran to get their EIDL grant. And I believe when you went to apply for that EIDL grant, you were automatically also applying for the EIDL loan. And so a lot of people didn't realize that. They thought they were just applying for the EIDL grant. And then when you get this approval back from SBA, which I think the best way to delineate between the two different kinds of loans, and if you're not sure if you're getting a PPP loan or an EIDL loan, PPP has to go through a third-party lender. You don't get that directly through SBA. So if you're getting something from SBA directly, it's likely EIDL and not PPP. And the loan packet that you're going to sign for a PPP loan with your third-party lender is likely going to be a lot more dense than what I've seen SBA release to their EIDL borrowers. It's actually a pretty light loan agreement. And depending on where your EIDL loan falls, if it's above $25,000, then you're going to have to pledge, you know, your collateral and personal guarantee. So your stack may vary in size depending on the size of your particular loan. But what I will say is the loan amount that you ultimately receive is not an amount that you necessarily request. Like, hey, SBA, I want $100,000. What I've noticed is they typically base it off of the annual income that you reported on your tax return. So some of my clients, and this is mainly for, I would say, for Schedule C filers, I think that's where they're basing the amount. If you have other employees, you may get a larger loan to also cover the employment compensation that you paid to your employees in 2019. I think that's sort of the benchmark that SBA is using for the amount of the EIDL loan. So what I will say is, let's say you went into this with 3 employees and now it's just down to you. So you get an EIDL loan, but it's really more than you actually need. What I was guided by SBA on is don't necessarily reject the loan and request a lower amount, because that can delay the loan by another 6 weeks. They recommended that you take the larger loan, but then return the portion of the loan that you don't actually need. So just a little advice there, because that was from the horse's mouth that, you know, that can cause some complications if you try to reject the loan and then reapply for a smaller amount. But, you know, this is why you kind of have to look at these things on a case-by-case basis in terms of what your business actually needs now, because what it needs now may look very different. Are there any other questions about the EIDL loans?
I don't have any.
No.
Okay.
I think everybody
All right,
ran
well,
away and.
on that note, I'm going to jump it. Yeah. So I'm going to jump in to the regulations that recently passed
Please.
a couple of weeks ago for the PPP loan. I feel like we're giving everyone whiplash because we're bouncing back and forth between the two loan programs. But recently, SBA issued some additional regulations, and some of the regulations are favorable to borrowers, some are not. So this goes back to our original discussion about how if you wait to file your forgiveness application, it could be good, it could be bad. We really don't know. But I'll start with the first part of the regulation. It deals with the caps on the owner compensation. So if everybody recalls, we talked about this at some length a couple months ago. There are caps on owner-employee compensation and the self-employment compensation that can be paid to a self-employed individual via Schedule C or to a self-employed partner of a partnership. And it basically is the lesser of, if you have an 8-week covered period, it's going to be the lesser of $15,000 approximately, or 8 weeks worth of the 2019 owner-employee compensation or 2019 net self-employment compensation. If you have a 24-week covered period, the cap is going to be the lesser of approximately $20,000 or 2.5 months worth of the 2019 owner-employee compensation or 2019 net self-employment compensation. Now, prior to these regulations, it didn't distinguish between an 80% owner or a 1% owner. If you were an owner, your compensation was going to be capped. However, the new regulation came out and said that if you have an ownership interest as an owner of an S Corp or of a C Corp that is less than 5%, then you are not subject to this cap. And what this was really gearing towards is companies that have stock options for their employees. You know, you may have an employee that owns a very small minority share in the company who has really no control, voting or otherwise, over the business, the PPP borrower's business. And the SBA doesn't want to penalize those employees just because they own a minuscule share of the company. Now, I will reiterate that this is only extending to the owners of S Corps or C Corps. So if your corporation or limited liability company is taxed as an S Corp or C Corp, you'll enjoy this. If you're a self-employed individual or a partnership, you will unfortunately not be able to enjoy this exception. Any questions on that before I move on to the next ones? All right. So there's also some regulations that address the interplay between PPP borrowers and their tenants or subtenants. So SBA wanted to clarify that if you are a PPP borrower and you're leasing space, but you either share that space or sublet part of the space to another business, that's going to offset the amount of rental that you can claim for a forgivable non-payroll expense. So for example, if I'm a PPP borrower and I pay $10,000 a month in rent, but I sublease to another business for $2,500 a month, only that $7,500 portion is going to be eligible as a forgivable non-payroll expense. So they do touch on sharing space, which is really, in my opinion, kind of an informal way of subleasing. So it really just, it goes down to the fact that if your rental is offset by some other business or some other company, you're going to have to account for that in the forgiveness that you apply for. The other item that they touch on is the rent payments to affiliated parties or related parties, as SBA puts it in this regulation. So if you have a related entity, which based on this regulation, the way it's defined, it can be as little as 1% of common ownership interest between you as the PPP borrower and another entity. That will deem that entity to be a related party. So if you are paying rent to that related party, it is eligible for forgiveness. However, if there is a mortgage on the property, your eligible forgivable rent is going to be capped at the mortgage interest that accrues on the property during the covered period. So that can greatly reduce the amount of rental that a borrower could otherwise be enjoying forgiveness for. Now, it does not touch on or limit the forgivable rent that is paid to an affiliate who does not have a mortgage on the property. So if your affiliate has a mortgage, it's going to hurt you. If they don't, it's not hurting you at this point. And of course, they reiterate the fact that the lease agreement must have been in place prior to February 15th, which we already knew that was already a restriction. And something else I want to mention that they note in the footnote of the regulation is the fact that if you are claiming your rental forgiveness based upon the mortgage interest that has accrued on the property during the covered period, the affiliate cannot also claim that mortgage interest to be a forgivable non-payroll expense. So just want to reiterate that as well. There's no double dipping, and they're really careful to cover that. And then finally, one more thing I want to mention is they kind of, in one single line in the regulation, they don't go into a lot of detail about this, but they throw it in there. The mortgage interest, for instance, that you pay to an affiliate or a related entity is not going to be eligible for forgiveness. So if you if you bought a property from one of your affiliates and there's a mortgage on the property and you're paying that mortgage each month, that mortgage interest, which otherwise would have been eligible for forgiveness, is not going to be eligible for forgiveness, unfortunately. And
it doesn't really matter whether you're using fair market value rate or AFR from IRS. It's not, because it's related party loan.
And I really want to, you know, I was talking to a client about this, and I want to just mention there's a lot of aspects of this PPP loan program that are unfavorable to clients that have even done things the right way. Mm-hmm. So I would always guide a client to hold real estate in one entity and operate in another entity for liability purposes. I think most attorneys would recommend that. However, in certain circumstances, this might hurt those clients who have followed the good advice. However, I think the benefits overall through the life of the business are going to far outweigh the disadvantages that are coming in via a very particular specific provision of this loan program that is going to, you know, be very short term. So some borrowers are getting very frustrated by the treatment that they're receiving under the PPP program. But I think overall, you know, this is a short amount of time. This is going to be a very limited effect on your business. And I would not make any kind of adjustment to what would otherwise be a smart structure, legal structure, just based on the particulars of this loan program.
Definitely. Mm-hmm. And we've said that the whole time. Don't bonus people. Don't pay in advance. Don't do anything that isn't normal in your ordinary course of business just for either of these programs, because it's just a good way to end up with a rat's nest that you've got to untangle later.
Right. Exactly. Now, one last thing I'll mention. I'm really not sure why they put this in here, but they sort of reiterated the fact that there are certain non-payroll expenses that can be claimed for a business that is operated from a borrower's home or from one of the owner's home. But they mention that the expenses must have been included on the 2019 return for the PPP borrower, or if they weren't operational in 2019, that they will be included on the 2020 return as deductible expenses. However, keep in mind, just because it's able to be deducted on your tax return does not necessarily mean that it is a permitted or forgivable non-payroll expense. So if you're operating from home or from your she shed, or you know, you can deduct that on your tax return, but that's not permitted as a forgivable non-payroll expense because it has to be business mortgage or business rent. So they kind of reiterate that rule, and I don't really know why, but it was in there, so I'm just gonna say it out loud again.
I think there just continues to be confusion about that. Mm-hmm. And you know, people are confused about, well, if it's deductible, if it's ordinary and regular business expense incurred in the, you know, your normal course of operations, it must be okay. But it's not. Yes, it's okay for deduction, but it's not, if it doesn't fit into the specific PPP parameters, it's not going to be the part of the forgiven amount. So that's the delineation there.
Right. Right. And that is, that's all I have to share today on the PPP front and on the EIDL front, unless we have any interesting questions from the attendees.
No, we've answered pretty much the questions as they've come up.
One question I did want to address, Jody was asking, and I did type in the answer, but I keep getting that question quite a bit in my email as well still, so I did want to say it out loud. So the question is, if you are self-employed with no other employees, how do you support the amount of your salary or compensation? Dues. If you applied as a self-employed with Schedule C and your PPP loan was based on the net income from your 2019 Schedule C as a sole proprietor, you do not need to show any payments to yourself or anything like that. The forgiveness is going to be based on that same Schedule C that you applied with. It's technically it's what's called compensation replacement. So you've applied for compensation replacement, and it's going to assume that that's the compensation you continue to take in 2020. That applies to Schedule C people. If you are an S corporation and you were the only true employee, so you were actually in fact on payroll, then yes, you need to continue to run the payroll for yourself. And in that case, what you're going to show as a support is going to just be the payroll reports for the duration of the PPP loan. It's going to be your quarterly 941s. It's going to be some payroll summaries and stuff like that. That's, but you don't actually need to have pay stubs or checks or anything like that as support. So just, it will depend on who you were as an applicant.
Right. And you know what, you just reminded me of something that I meant to touch on with EIDL, not to jump back and forth, but
I love it.
You really do have PTSD, Jack.
The alphabet.
I do. Oh my gosh. So I looked at the actual loan agreement for the EIDL loan, and something interesting that I have not seen elsewhere talked about with respect to EIDL is the fact that the number one, you need to keep documentation and like paid receipts for the accounts payable and things like that, the payments you're making with the EIDL proceeds for 3 years. So it's not 6, but it's still a period of time that you have to hold on to these receipts to show SBA if they come asking. And another interesting part that I saw is there has been SBA guidance out there that says that you're not supposed to purchase fixed assets with the EIDL proceeds. So I feel like that typically is referring to assets you're going to hold on to for a year or more. So what I would say is if you have to replace a fixed asset, like a major piece of equipment or something like that, try to not use your EIDL proceeds for that purchase. And if you have to, I would just, again, reach out to that SBA rep that you worked with just to say, hey, is this going to be okay? And try to get something in writing from SBA. And lastly, the most interesting part of the loan agreement that I noticed was if you purchased, certain goods and products in the normal course and operation of your business, the loan agreement requires that they be American made to the extent possible. So you are required to, buy American made products with the EIDL proceeds. I haven't heard about that until reading the loan agreement, but I thought that was interesting.
You just said interesting 5 times about EIDL, and you're the only one who thinks that's interesting.
By interesting, I mean annoying.
Yes, that's better. There's the euphemism that shines through. Like
Right,
this
right.
weekend, I was reading the interesting EIDL package. Thank you, though. You know what? And that it goes toward another point, which is lots of people read, lots of people sign things that they haven't read, and this is not the time to be doing that. And although this isn't certainly a negotiable contract, you're not going to get the SBA to change anything. You certainly should be reading these things, and it's easy. It's very tempting to just click the box and say accept, and DocuSign and all of that on the computer is really easy to overlook. The importance of really reviewing those agreements so that you don't inadvertently run afoul of some of these covenants. So it's always important. It always shocks me when we get to the end of a real estate closing transaction and something comes up and somebody says, well, I didn't agree to that. And it's like, paragraph 5, your initials are right there. Definitely saw it, definitely agreed to it. You know, but people don't read, especially boilerplate verbiage, because they feel like, well, that's standard, and standard is not problematic. Standard is oftentimes Marina's favorite saying, the devil's in the details, and that's usually where those details are located. So,
well, everyone thought the force majeure was just a filler, fluffer,
yeah,
additional provision shoved at the back, and look at how important that became. The reason why they're there, the reason why all these extra little boilerplate provisions are at the end of the contract is because there's been hundreds, if not millions, of dollars, hundreds of thousands, if not millions of dollars spent in litigation, fighting over these paragraphs. And it's funny how my clients want me to just pull them out to make the contract shorter.
It's like, we don't pay per page here.
Right.
This is not a nuisance fly at the picnic. It's an important provision. So, well, ladies, once again, you've done a remarkable job. I believe we have answered all of the questions that have come up. For those of you who do need a refresher on the rules, you can visit our YouTube page or the Koontz Associates or Koontz Parkin Facebook pages to re-listen to those webinars where we covered the loan application process and the finalization of the rules in terms of what was required for the forgiveness application. We would ask too that you follow us on Facebook for Koontz Associates and Koontz Parkin to get the latest news. Any pop-up webinars that we are doing, or our regular Tuesday occurring continuing series of webinars will all be posted there. You'll find the schedule of topics. We do move around between real estate, corporate, and tax topics. So if you have something in particular you'd like to hear about, you just need to let us know. This recording will be distributed by email. It's also available on our Facebook and YouTube pages and on our website. So thank you for joining us for this PPP update. We will see you next Tuesday.